Do you struggle to trade effectively with triangle patterns? In this video, I will teach you how to master ascending, descending, and symmetrical triangles to improve your trading precision and profitability. You will learn how to identify triangular patterns, set entry and exit points, and avoid common trading mistakes. What are triangular chart patterns? Triangular chart patterns are powerful continuation or reversal patterns formed by converging trend lines that indicate market indecision before a breakout occur. We have three types of triangular breakout. We have ascending triangle, we have descending triangle, and we have symmetrical triangle. Ascending triangles are formed by higher lows with a flat resistance line, signaling a potential bullish breakout. Descending triangles, on the other hand, are formed by lower highs with a flat support line, which signals a potential bearish breakout. And the last one, the symmetrical triangles, are formed by converging trend line, which signals breakout in either direction. Now that you know the types of triangles, can you identify them in the chart? Can you trade them? If you can't, don't worry, I've got you covered. So quickly, let me introduce you to how to identify triangular chart patterns and how to trade them. There are steps to use in identifying triangular chart patterns. The first step is for you to look for converging trend lines with at least 2 to 3 touches. The second one is to ensure volume decreases during pattern formation. You have to ensure that you can see that the volume is decreasing. And the last one is to confirm breakout. You need to confirm breakout direction with a strong candlestick and volume spike. Now, how do we trade each of these three types of triangles? Quickly, let me introduce you to the strategies used in trading each of those triangles. Let's start with ascending triangle. As you can see this sustained bullish move. We have the lower highs which are formed here, and if you look at it critically, this is an ascending triangular pattern. I told you initially that you have to make sure there are 2 to 3 touches before you can confirm that it's a triangle. So how many touches do we have here? We have 1, 2, 3. We have 3 touches on the ascending support line, and on the resistance line we have 1, 2. So we have 2 touches. So 3 touches below and 2 touches above, which confirms our first point. The second point says there has to be a decrease in volume. You can see this is the sign of consolidation, and the next point that we need to confirm now is a breakout. So we need to confirm a breakout before we can trade this pattern. Another point that I quickly want to share with you is that most charting booklets will tell you that whenever you see an ascending triangle, you should expect a breakout to the upside. Most times that is correct, but it is not always correct based on my experience. When you are trading ascending triangle, symmetrical triangle, or descending triangle, you should have an open mind. One thing I want you to watch out for is what the price is saying. Price action. Price action is key. So you can't see price coming this way and you said you are still going to buy. Let's say you have a breakout to the downside. I say you are still going to buy because in a charting textbook, you were told that it's a continuation pattern. It is not always so. If it is so, I'll be as rich as Elon Musk. So I'll go and borrow money, and each time I see a triangle, I'll just buy. If it's ascending, I'll just buy. If it's descending, I'll just sell. And I'll be richest person. So for you not to lose your money, follow price action. And if you see price going up, if a breakout is confirmed to the upside, you buy. If it is to the downside, you sell. So we'll watch this now to see if it is going to be a sell position. So let's watch it carefully. See, a bearish candle has just been formed. And you can see a candle has come to test the ascending support line, but still closed as a bullish rejection candle. So yes, the spike broke out of the support line, but this is not a confirmation. Now we have a confirmation. The third point says we should watch out for a confirmation. So the point I just shared that I told you about breakout to the upside, which is what most charting books are saying. Now you can see that our breakout is to the downside. And you can see how healthy the bearish candle is. So the spike in volume is huge. So this is a good confirmation. So how do we enter this trade? If you're entering this trade, what do? We look for entry right below this lower high here on the breakout candle. Our entry will be here. Then where do we place our stop loss? Our stop loss will be above this resistance line. So stop loss here, entry here. So where would our take profit be? Because if you are entering a trade, you should have a clear goal of where you want to exit the trade and where you want to take profit. You cannot just be in a trade without knowing what to do. So for you to determine your point of target, which is your take profit, you measure from this flat resistance line down to this ascending support line, and you extend it down, you project it from where the breakout occur, you project it. So this becomes our take profit level. Do you understand it now? So take profit level, you measure for this place, this point to this level, then you project it to this level. That's how you determine it. So we'll watch to see the next candle. You see how price is acting. And see, are you noticing anything? Wow. So after the breakout, price came this low, and after that price went back to retest the breakout point. You can see price came this low to retest this point, and after that what happens? See, our take profit has been hit. So after the breakout, price rallied up, retested the breakout point, and after that it was a wash through until our target was hit. So if you do not enter at this point, price gives you a second opportunity, and most times it is good for you to wait for a retest. When you enter at a retest, it gives you more confidence. So this is how you trade an ascending triangular pattern. Another angle that I want to introduce you to on how to identify it in a chart is the descending triangle. I know we just discussed the ascending triangle, and now we are discussing descending triangle. So the question is, how do you trade a descending triangle? As you correctly guessed, is the inverse of the ascending triangle. So after this sustained bearish move, you can see price came here and you have this decrease. You can see this behavior. You can see the behavior. So I told you earlier on that there have to be 2 to 3 touches. And what we have here, we have one touch here, we have second touch here, third touch, and we have the fourth touch. On the support line, we have two touches here, and you can see 1, 2. So where would this price head to after this descending triangular formation? Where would price go to? I want you to tell me in the comment section. I'll pause the video at this level and tell me where price will head to. Okay, if you are not so sure, hold on for now. You can watch. Let's watch out for the two candles that will show up. Then you tell me where the price will head. Okay, the first candle has been formed. Second candle has been formed. So we have one, two bearish candle that has been formed. You can see it clearly. So tell me where price will break out to in the comment section. As it is now, alright. So you've made up your mind. Would the breakout be to the upside or to the downside? Answer yes or no in the comment section. So what we have, we have a bullish candle at this point, which does not define anything, does not confirm anything at this point. And now we have a breakout. What was your answer? Was it a breakout to the upside or to the downside? So as it is now, we have a clear breakout to the upside. You can see the bullish candle that was formed. You can see the spike in volume. So this is a breakout to the upside. So how do we trade this? If we are trading this, where should our entry be? Our entry should be just above this lower high here on the breakout candle. Be at that point. And where should our stop loss be? Our stop loss should be beneath the support line here. You need to give room for price to move so that you don't get taken out by your stop loss before price heads in your direction. So give it some room. Don't let your stop loss be too tight. At the same time, let it not be too wide. So let it be reasonable. So as it is now, we'll determine our entry and our stop loss has been determined. So where should our take profit be? And just like in the case of ascending triangle, we measure from this descending resistance line all the way down to this flat support line. Then we project it where the breakout occur to determine our take profits or our target level. So our target level will be just right here. Our stop loss here, entry here, and our target level here. So what do? We watch out, we wait for the trade to take place. See how the price is going and see as you can see our take profit has been hit. But what have you noticed here? After the breakout, what have you noticed? What have you noticed here in this price behavior? After the breakout, price came all the way to retest the breakout point. You can see price came and retested the breakout point before heading to hit our take profit. So you should wait. You should try and be patient. You need to, if you are not a patient someone, you need to learn patience. Wait for a retest. I know waiting for a retest would mean missed trade most times, because sometimes when there is a breakout, price just take off without coming back to retest the breakout points, but oftentimes it does. So you have to be patient and wait for a retest. When there is a retest, you can buy at that point. At that point, most times the price is even offered much more cheaper. So when you buy there, set your stop loss and determine your targets, and you are good to go. Let me ask you a question. Which would you prefer? Missing a trade or losing out on a trade? When you miss a trade, your account balance remains the same. But when you lose a trade, your risk gets deducted from your account. So if you are risking something like $50 or $30 or $5, depending on your account balance, at the end, whenever your stop loss gets hit, something gets deducted from your account. So which would you prefer? Money being deducted from your account or your account balance remaining the same? So no rushing. Always wait for a retest of the breakout. That will give you a more profitable pattern to trade. So let us go into symmetrical triangle. Let's look at how to trade the symmetrical triangle. You can see after this sustained bearish move, what we have, you can see when price gets to this point, you can see the indecision. There is a drop in volume. Like I told you earlier, for you to trade a reliable triangular pattern, there have to be 2 to 3 touches. So what we have here, we have our first touch here, second touch here, and the third touch here. And we have one here and this one. So 2 touches on the support level and 3 touches on the resistance level. And like I also told you earlier, when you see a symmetrical triangle, you should expect a breakout in either direction. That means a breakout will occur to the upside and it could also occur to the downside. So this is either a continuation pattern or a reversal pattern. So where do you think price will head next? Just pause the video and look at the graph carefully. Where do you think price will head next? Okay, let me give you more clue. See, we have a bullish candle now. So where do you think price will head? After that, what do we have? We have a breakout to the upside. Did you guess that price will break out to the upside? If your answer was yes, then you are right. You see, this is a breakout to the upside. But one thing you need to know is that you don't need to guess. You need to know how price is going to go. All you need to do is just to follow price action. Price will tell you where it is going. Don't just get faked out, that's all. So there is a volume spike, which is our breakout. This huge bullish candle. So where do we enter this trade? We'll take our buy order right above this level here, and we'll place our stop loss above this lower high. And our target level, where do we place our target level? So for our take profit, we measure from this resistance line here to this support line, and we project it to get this point. So this is our take profit, this is our entry, and this is our stop loss. So we'll watch to see how price is going to play out. You see, after the breakout, you can see our target has been hit. I told you earlier on, sometimes when there is a breakout, price don't come back to retest the breakout point. It will just go straight away. So this is what just happened. You can see after the breakout, you can see how healthy the breakout point is. The spike was so huge, and after that, you can see price just rallied and hit the take profit. But it is very good if you can wait for a retest of the breakout point. So sometimes you may miss a trade if you are waiting for a retest, but it is better for you to wait. So this is how you trade symmetrical triangle. Now, I want to share a few tips with you that will help you to be more profitable when trading triangular pattern. When you are trading any of this chart formation, it is more profitable, it is more reliable if you are trading it on a higher time frame. You can start from the hourly time frame. Patterns seen on those time frames are much more reliable. Then you can combine the triangular chart analysis with an indicator. You can use RSI or MACD for confirmation. Another tip that I want to share with you is that avoid false breakouts by waiting for a retest of the breakout level. I've said that several times in the video. Always avoid false breakouts. Avoid false breakouts by waiting for a retest of the breakout level. We saw that in the case of the ascending triangle. We also saw that in the case of descending triangle. Price came back to retest the breakout points. So when you do that, you have a more reliable pattern to trade. Another tip that I want to share with you is that you should always track volume. Breakouts with high volume are more reliable. You can see in the case of the symmetrical triangles, you can see how the volume spike there is, and with the other points, you can see how healthy those breakout points are. So always watch out for a healthy breakout, a high volume breakout. Triangular patterns are versatile and effective tools for traders, offering clear entry and exit strategies when used correctly. And I'm emphasizing used correctly here. Most times people confuse triangular patterns with pennants. Most people don't know the difference between pennant and triangular patterns. So you need to actually understand. For example, if you are trading symmetrical triangle, you have to make sure it is not a pennant. And for you to avoid that, I have a video right here that explains pennant. So check it out.